Could we actually live on dividend income for the rest of our life? And if yes, which stock would be the best to invest in? In this video, we're going to talk about one of the best strategies that I follow to start living off my dividends. My name is Ron and welcome to Pinoy Stock Investors, where we help our kababayan start their investing journey. For many new investors, building a portfolio that can replace a paycheck seems almost impossible. While there are a lot of companies that pays dividends, they are not created equal. Some companies pay a higher dividend yield, which means they pay a larger amount of cash, but they can be riskier. Others may offer a more modest yield, which means they pay a smaller amount of cash, but they provide a steady long-term growth. If you're looking to live off dividends, the challenge is finding the right balance, a mix of immediate cash flow coming from your dividends and a long-term stability for future growth. Before we dive in, we need to ask ourselves an important question. How much money do we actually need to live off dividends? This will be different for everyone based on their lifestyle, financial goals, and living expenses. Whatever number you come up with, the goal is that once your dividends are able to cover that amount, or at least your living expenses, you should be able to live off your dividends. But remember, it's also crucial to set expectations on what kind of life do you want to live. Do you want to live simply, or do you want to travel and enjoy some luxuries along the way? Your dividend strategy should reflect these choices. You should ask yourself questions like, are you the kind of person that want to travel now and then? Or do you enjoy trying different kinds of restaurants? Or sometimes once a week, do you go to Costco and shop bulk? I think I just described my wife. Okay, now that we've established the lifestyle that we want and we have a clear picture of the financial goals, it's time to create a realistic plan for how much dividend income do we need to cover this lifestyle. The next question becomes, how do we actually get to that level of dividend income? There are a lot of ways that you can do this, and here's what I'm currently doing. I'm investing in ETFs that holds blue chip companies. These are SCHD and VOO. VOO is on my retirement account and SCHD is on my taxable account. I also have individual companies like Google, Microsoft, Apple, and Berkshire Hathaway. But today, let's focus on SCHD. If you're new to investing, SCHD is an ETF that tracks an index which is focused on the quality and sustainability of the dividends, which is the Dow Jones US Dividend 100. This index is essentially a list of companies which meets the criteria of the Dow Jones US Dividend 100 and its requirements. SCHD is a low-cost ETF with an expense ratio of 0.06%, which means that for every $10,000 invested in SCHD, every year you will pay $6, which is very cheap compared to other investment options. Another thing that I like about this ETF is that they invest in companies selected for their fundamental strength, meaning they invest in companies with a stronger financial health compared to their peers, which is determined by financial ratios. These are numbers that help assess the company's performance. SCHD also has a forward yield of 3.44%, which means you can expect that 3.44% of your investment to be paid as a dividend each year. Let's assume that our living expense is $57,000 based on the amount that we discussed earlier about the lifestyle and living expense. Now let's use MarketBeat's dividend calculator to figure out how long will it take for my dividends to cover this living expense investing in SCHD. Currently, I have 301.44 shares of SCHD. I have been investing in this ETF for about 3 years now. SCHD has a solid track record with dividends growing for the last 12 years. Over the past 5 years, the dividend growth rate has been around 12%, which means the dividend payouts have been increasing by approximately 12% annually. This is a great indicator of a stable growing dividend source. First, let's plug in the details for SCHD. Let's choose a stock to populate the dividend data, which is SCHD. Next is we set the following to reflect what we want. Investment type will be individual stock. Distribution frequency would be annually, and we definitely want to drip so that we can reinvest all those dividends back to SCHD. Let's add the current shares that I own over here. That is 301 and 44 shares. Next is we'll assume that every week we'll consistently add $100 to our SCHD position. This means that we'll be investing an additional $5,200 per year into this ETF. Now we add that annual contribution, $5,200. Then earlier we looked at SCHD's dividend profile, and we saw that in the 5 years, the dividend growth rate is at 12%. Okay? And looking at SCHD's investor relations fact sheet, the annualized performance in the 5 years is also about 12%. To be a bit more conservative in our calculations, let's assume that it's a slightly lower growth rate of 11% for both dividend and share price. So we plug in 11% on expected annual dividend amount increase per year and another 11 expected annual share price appreciation per year. Let's set our investment timeline to 30 years. And voila, it shows that after 30 years, we'll have a $2 million worth of SCHD and an annual dividend income of $76,000. And if we scroll down a little bit, we'll see the breakdown of the dividend income we earned each year. Between years 27 and 30, I should be able to live off dividends with a little adjustments based on that $57,000 annual expense that we set earlier. The growth of the dividends will allow us to make up for the shortfall as the years progress. It goes to show that we can definitely reach our goal living off our dividends from our investments if we just stay consistent, committed, and locked in. While I'm not really looking for the fastest way to achieve this, we can reach our goal faster if we just adjust a little bit of the numbers, like our weekly contribution. The important thing is that at some point, I'll have the peace of mind knowing that my family will be financially secure and I'll be able to provide for them as long as I stay consistent and stick to my plan. With that, I'd like to leave you a powerful quote that I heard from one of my teachers back in college. It goes, "It's not your fault if you are born poor, but it is if you passed away as one." This quote serves as a reminder that while we cannot control where we start, we have the power to change our financial future through hard work, consistency, and smart investing. If you get value and enjoy this video, feel free to subscribe to get more content like this. Let me know in the comments how much are you adding to your investment consistently and when, weekly or monthly. I recently reached my first 100K and I made a video how I did it. You can watch it over here. And I hope you like this video. Have a great day and peace.